All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So spiders this week and stock market having a pretty good rally week here. Going into the end of quarter, you can see, especially on Friday, SPY was up 1.41% on the day. Some of it due to window dressing. You had stocks like Nvidia up another 1.44%, and this stock is, it's obviously been a winner really all year. It's actually up 100% now year to date, which is quite remarkable for a stock that was a $300 billion company, now a $600 billion company, just in this quarter. But this is what happens: window dressing into the end of the quarter. These funds, they just pick the winners. They stack their statement, and then they tell their clients that they owned Nvidia all month, even though they didn't. And they dump things like the KRE and the XLF and some of these banks that have obviously performed very poorly here towards the end of the month. But in any case, markets holding up. We had some very light volume here. A lot of it had to do with, I believe, kind of a lack of data going on. And market now kind of looking ahead. We have some inflation data coming up this week. We have jobs number on Friday, and that will actually, so it is a shortened week for Good Friday. So we will have, the market won't be able to react to that until the following Monday here. But markets have very light volume right now. You can see outside of the end of quarter pop there in volume on Friday, which is totally normal. Very, very light volume. It is kind of a spring break type season here a little bit as well. So that may be kind of weighing down on the participation. And I'm definitely seeing that down here in Florida here. So there's definitely people on spring break. And generally when there's that light volume, you want to give the market kind of a neutral to upside bias. So right now the market's holding up. We got above this pivot here. By the way, looking over at the triple Qs, they just had their best quarter since 2000. I think almost 17% gains in the NASDAQ 100 there via the triple Qs there. Now we are coming into some resistance here. This major gap was really essentially that Jackson Hole gap going all the way back to August of last year. So, market is a little stretched getting into that. Again, if we flip back over to the spiders here, you're going to see we're kind of going into this area here where we broke down back in February, and then you also have kind of a trend line going back to those August highs, connecting the February high right in that area. So if we could get into that in this week here, I would probably favor a little bit of downside to, maybe not this week, but, if we get up there in the middle of this week, I could see some downside maybe into the following week of April. But the market's had a nice move, and again, as long as the volume remains light, you have to give the market a little bit of a neutral to upside bias here. Right now, why is the market rallying? Well, the market's essentially pricing in, from what I can see, a soft landing, which has never, the Fed has never been able to engineer that. But that's what the hope is right now. Another reason why it's rallying, and I've talked about this quite a bit lately, is, in my opinion, there's just too many hedges, too many shorts in the market, and that was evident by the reaction off the FOMC. So the previous week, last week, we had a really good sell on the FOMC, and Thursday was a bit of a pause. Friday should have been a dump. If we were going to go down, it should have dumped on Friday, if not Thursday. And that didn't happen. And you can see we just, Monday gap up, Tuesday slightly lower, and then 1, 2, 3, just leaving gigantic gaps on the chart here, by the way. So not really a healthy move, all things considered, but it's a move nonetheless. And what that tells me, there's just too many hedges, too many shorts. And what happens is when everybody's prepared for a bearish news event, it just makes it very hard for the market to go lower. And right now, from what I'm seeing, is there's a lot of, like I said, a lot of shorts and not enough sellers. And what I mean by that is there's shorts, but you don't have people liquidating shares. They're borrowing to short and buy back later. If you have people actually liquidating shares, the market can go lower. But when there's a lot of shorts in the market and the market manages to hold up, then they have to cover, and it causes the squeeze. So that's kind of how that works. But again, right now, outside of that, the other reason why the market can rally here, and I've kind of suspected this lately is if we go over, I'm going to show you the Fed funds rate. So it's basically 4.85 to 5%. That's the target range. And if we look at the 2-year Treasury yield, that's at 4%. So the Fed funds rate is actually, almost a whole percent ahead of the 2-year yield. That has not been the case for a very long time. Really, I think you got to go back to like 2021 or maybe even 2020, back before that was the case. So the Fed is actually, believe it or not, ahead of the curve for right now. So what that means is that the Fed can actually kind of back off of their rate hiking. And I think the market sniffs that out. I think the market is smelling that right now. And that's why we're getting a rally here. Now, again, if you go back and look throughout history, when the Fed pivots or pauses, that's usually the sell the news, the ultimate sell the news for the big leg lower. Now, we don't have FOMC until May 1st. So we've got, basically a whole month until the next FOMC. But I think that's kind of what the market is pricing in right now. So I believe the market's in a little bit of rally mode right now. Again, short term, I think we're a little stretched, especially if you get up into this trend line here. If we get up into this area on the triple Qs, I think we probably get a pullback, but I don't know if it's much more than a pullback. Okay, so I think a bigger sell would likely happen later on, but markets are behaving well right now, and we'll respect them for the time being. All right, flipping over to the Russell here. So the IWM, that did get a bid here, got back above the 20 moving average. Still, I don't see a ton of upside here in the Russell in the short term. You're going to have resistance here at 180. The 200 moving average is a gap window, and then just above that is the actual gap fill at 181.41. So that's going to come into some headwinds. And again, you can see that essentially coinciding with that gap there on the triple Qs and that trend line there on the spider, so not that far away. And then if we go over to the diamond here, via the Dow, you've got the 100 MA right there at this red bar high, and this pivot right here, right in that 335 area. So lots of resistance coming up here on the markets in the short term. And again, we're a little overbought going into that, so I would favor something of a pullback, maybe not necessarily Monday, but I would say by the middle of the weekend, maybe into the following week of April, we could see a little bit of downside here, maybe some profit taking. But again, we'll take a look at it when we get there. And again, as long as the volume remains light, the market can hang in there. So just be aware of that. All right, so getting over to our sectors here, starting off with the SMH as always. Again, I'm watching this big rising wedge here. We are now into that upper trend line. And again, going into a lot of resistance. So lots of volume here on this sell-off and a subsequent bear flag from the first quarter of 2021. And you can see we're going up into that on very light volume. And we are still stretched. I just don't see a ton of upside here for the semis. But again, if the market rallies, they can hold up. So just respect that here. But overall, I think they're very stretched. And again, I've talked about NVIDIA. I mean, up 100% here for a $300 billion company. That's it's beyond irrational, whatever you want to call it here. But again, we'll respect the market. If this continues higher, I don't really see it getting through 280. But again, just an incredible move there for NVIDIA. And this is just, this is how markets work. These guys pile into all the same name, and then they end up piling out. So, but right now, markets are holding up. SMH, so we're watching that rising wedge there. If we do sell off, you could get all the way down to that 245 area, which would be that lower trend line. And then this wedge will start to tighten as we get into the May timeframe, which coincidentally, or perhaps not, is that next FOMC. But anyways, let's get over to the IGV here. So cloud software, again, having a nice move. We did fill that gap there going back to August. So next level right there will be the next gap at about 310, so 309.94. And then if you get through that, you're going to go pretty much back to that January pivot from last year. And then that also basically coincides with the August highs. So a lot of resistance here on the IGV. It is a little overbought, again, just like a lot of other things. But it's holding up for now, so we'll respect it. But the next level I'm watching there is that 310 area. For the transports here, much better look here this week. So again, got really overbought, and then still had a big pop on Friday. So you get that window dressing end of quarter stuff. That's just what happens. We did make a significant move on Friday because we closed back above 14,139. So that was the breakdown area. And they did recapture that on a weekly close, so we'll respect it for the time being. Next levels I've got for this are right around 14.7 to 14.750, and then if you get through that, it's 15,000. But again, it is a little over, a little stretched here in the short term. Basically it's up 1,000 points in the last 6 sessions. So may need to do some backing and filling here, but a nice move there for the transports on Friday, and we'll respect it for now. Bonds we already touched on a little bit here, but if we look at the 2-year note, ZT again getting a little bit of a bid, so yields came in just a little bit on Friday. Remember, the important thing right now is that Fed funds rate is higher than the 2-year yield. That's really all that matters right now. Now, as far as bonds here, I just don't see a ton of upside. They're holding up okay, but they're just going into a lot of resistance, and that's not the greatest looking weekly candle there for the 2-year. The 10-year is holding up a little bit better. A lot of resistance up here, and the same thing really goes for the 30-year. So I'm not seeing a ton of upside in bonds, but they're hanging in there okay. And again, if that 2-year yield starts to push back up, that's going to cause problems for the Fed. But for right now, it's hanging in there, so we'll respect it. All right, over to housing. So XHB getting a decent bid here. I got this heading up to probably around 68, 68.50 in the short term. It did make another significant move here, getting back above that 66.28 level on the weekly close, but still a lot of resistance above that. ITB is in a little bit better shape. Remember, this has stocks like Home Depot in it, which were much higher on Friday, so that did pull that average up a little bit. Home Depot, it's got some resistance at 300, but ITB in a little bit better shape here. VNQ finally getting a bounce off the lows. We talked about this is basically into the October lows, so it should have a bounce here, and it did get one this week. Near term 84 and change will be some good resistance, and then if you get through that, you have this necktie of the 150 moving average on the weekly, but a nice little oversold bounce there for the VNQ. Over to financials here, so XLF. Again, getting a bid, but still under pressure here, still below that 20-period moving average. And 32.25 has been a good pivot point for the XLF this year. Again, going back to the May low, so that was your pivot there. We broke through that, and now we're just back testing it again one more time with that 20 moving average down sloping. It's had a nice bounce off the lows, but this is still below resistance. So financials are still kind of not in the best technical position. You can see KRE here. You've got a up move here on the 24th, and then really just sideways. Whereas you look at the spiders, for instance, this was the price action on the 24th, and we've gone straight up since then. So again, financials still noticeably underperforming, and that makes sense. Obviously, this banking problem is far from over. We still have inverted yield curves, and it's probably only going to get worse down the line. They've managed to stabilize things for now, but this is not going away here, and obviously the charts are telling us that. But again, in the near term, they're holding up okay, so we'll just leave it at that for now. All right, shifting over to energy and commodities here. So crude getting a bounce here. So OPEC just came out. I'm doing this video on Sunday afternoon. They announced about 1.1 million barrels production cut. So that will obviously, I would assume, the price of crude will gap up at 6 p.m. I'm not sure how much. I mean, 1.1 million barrels is not a huge amount here, but we'll see if that can give the crude market a lift here. It has had a nice move off the lows. Maybe that was being priced in a little bit here. I'm still in the camp that crude has to go down a little bit further here. If you go back to the beginning of the year, we did an interview, Jason and I, and we talked about the price of energy kind of being under pressure, specifically crude, in the first 2 quarters. I still think we have to have one more low here, but I could be wrong. And again, resistance here for me on the weekly time frame is at 77.47, so that's going to be that red bar high, and then the big level is going to be at about 81, so 80.94 is this red bar high here. If you get above that on a weekly close, then I think crude is probably put the lows in, and it's going to go a lot higher here. But again, we've had a nice bounce here. Maybe somebody knew something about the production cuts. Maybe they just wanted to squeeze shorts. I'm not really sure, but we'll see what we get here with crude. It's in a very interesting place, rallying right into that 50 moving average there on Friday. It's essentially back testing where it broke down from. So we'll see. And again, that trend line, if we flip back over to the weekly, that's basically right in there with that 20-week moving average. So we'll see what it does Monday. But interesting news there coming out from OPEC over the weekend. XLE, so getting a nice little bounce here again. And, you got above the 200 moving average. And again, this weekly level here was that previous red bar low. We broke through that, and now that is getting back tested. So again, we'll see what that does next week. It's holding up. It got a nice bid off the lows. Maybe it needs to pull back before it can put in a next, kind of like zigzag up. But again, we'll see what we get. XOP, again, kind of closing above that 20 moving average on Friday. Again, 130 will be good resistance, as well as that 50 moving average. Then you have this trend line, which is upsloping. That's where you broke down from. So that would be your kind of bigger level there. On the daily time frame, OIH, oil services, also touching that 250 level and getting a bounce, still not above the 20 MA. But again, I told you 280 would be resistance, and that's where it's backing off. If this consolidates, it can move higher, but again, I'm kind of neutral on it at the moment. It's a lot of volatility here. Take a look at the move down, and then big bounce, lower low, slight higher high. So I'm not involved in it right now, but I am watching this. Anyways, over to natural gas. So natural gas had a contract roll over this week, and basically the lows got defended here. I believe this can put in a W bottom or double bottom pattern. You're going to see here on the weekly. That's basically what happened. We had this big move down, big 1-2 up move, and then it took 4 weeks to really kind of reverse this move and come back into the lows. And we finished off the lows this week with that big monthly tail pattern being defended. And we're into this area, which has been essentially a floor for the last 11 years or so. And if you take a look at the futures contracts here, and I know Jason just did an interview the other day. If you haven't checked that out, go do it with Elliot Gu. And we talked about contango, and I've talked about this on my channel as well. If you look at, the difference between now and say 2020, when we were at these prices here, is in 2020, the futures contango curve was flat. If you just go out to, November, the market's pricing in 320. We're in contango all the way. I mean, and we go out to 2024. We're looking at $4 or $5 here. Well, not quite $5, but $4.50. So the market is pricing in a shortage, and he did talk about the fact that basically Freeport, and which Freeport, by the way, is online now, but Freeport closing down, and really just specifically Europe getting bailed out by a mild winter, and that's the reasoning here. But either way, I think this has a good shot of putting in a W bottom. So we'll see if nat gas can get going. But either way, this is definitely on my radar here. But pay attention to that contango curve. Tells you the market is looking at higher prices. Also, seasonally, nat gas tends to bottom around this time of the year anyways. All right, anyways, let's get over here to, let's see, what do we got here? So let's get over to uranium. So CCJ, still been all over the map lately. Nice bounce here, back above 26. Near term, it's going into some resistance here. I could see it getting up to maybe 27, but that's about it for right now. URNM is very interesting to me. So you had that slight higher low. We talked about that last week, and then this has just been, it's not making it easy, right? So we got through this trend line. We broke below it, then we put it a higher low, and I said, look, if you can get back above this trend line, you have a shot at making a fake breakdown. Well, of course, they close it like literally right on that trend line this week. So we'll see what it does here. If you can get back above that, and then, again, I would say above 34.22, I would say you'd negate this breakdown completely, and this can go higher. But interesting little chart there. We'll watch that going into this week. I know I talked about UEC, and again, it defended, they defended that 200-week moving average. It got a bounce. I would have preferred to see a better bid on Friday. So it did close back below $3. But, if you can work your way above the 20 moving average and above, 314, 315, then this can go higher here. But again, nice little bounce there for uranium this week. Over to ag here. So DBC, not a whole lot going on, but it did get a bounce. Again, watch this trend line here. On the daily, if that gets rejected, it can go down to 22 and then to $20, but those would be good buy levels there for the DBC. Over to the DXY here, so not a whole lot's changed this week. What I'm kind of seeing is a down move and now sideways kind of action. I think this wants to go test double bottom, maybe even a pierce of double bottom. I think I said that last week, maybe 100 and a quarter, somewhere in that area. So I do think the dollar has one more push lower here, but this level should be very good support there on the daily and weekly time frames. As for gold here, gold did something significant this week. So you see this yellow trend line here. That is representing an all-time quarterly closing high for gold. So that red bar right there to me was very significant. And it's been significant for a while. The fact that we closed the quarter above that, and this is a quarterly chart, by the way, that is a sign of strength. And you can see we tested the 20 quarter moving average, and got a nice bounce off of that. And this chart's holding up. We have to respect it right now. The only problem I have with gold right now and I mentioned this last week, I just wish GDX was at 52-week highs. I want to see the miners kind of leading the metal here. Even GDXJ, same kind of thing. GDX and GDXJ are closer to all-time lows, and especially GDXJ, than they are at all-time highs. Now, you could say that, well, they have a lot of catching up to do. It's possible. That's one way to look at it. I just generally, the miners will tell you that the metal is going to move. Usually GDX is a leading indicator, specifically, like, for example, going back to September, you see the 1, 2, 3 higher lows there. And that told me that, and I said that gold is going to rally late last year, and that's what happened. You see gold having 1, 2, 3, a triple bottom, actually lower lows, versus GDX higher lows. That was bullish to me. Right now, we're way off the highs. So right now, I think the case could be made that gold is just up off of fear because of the banking industry. But the chart is the chart, and that's a new all-time closing high there for gold. So that is significant to me. I'm not going to chase it up here, but we'll see what it does. I mean, it's been holding up okay, and it's the ultimate fear play. So as you guys know, anyway, silver here. Again, just an amazing rally here. This can get up to 24.50, 24.75 here in the short term. Just be aware it's really stretched. Please don't chase it. It'll have a pullback if you want to buy it. It's going to pull back. It has resistance in this area here with this trend line. But it is a commodity, so they tend to overshoot here. But you're up, $4 in the last 4 weeks. Big move there for silver. I do think it needs to come back in. It is very stretched here. Platinum, I like this pattern here. We talked about this firming up potentially, and it has. So you have the big green bar there on the daily, and you kind of sold off a little bit. We tested the low multiple times. And now we're bouncing back up here. So this looks okay for a move to 1040. So I'll give it the upside bias into that area for now. But again, if it trades back down and loses 960 spot 40, then it's going to go probably back down to 920. But it's holding up very nicely right now, so we will respect that. In the near term, copper also holding up okay. I'll give this the upside bias to 420 for now. So that pattern on the daily looks okay. I still think eventually it gets down to 375 though. But in the near term, it's showing me a bullish pattern, so I have to respect that. All right, for Bitcoin here, lastly, nothing's really changed. Still holding up decently. We've tested this green bar here, 26,926 multiple times, and we've gotten a nice bid off of that. Moving averages are starting to catch up. I'll give this the upside bias again to 30,000, and maybe even a pierce of 30,000, but that's really all I see at the moment. Again, just a ton. If we can get the chart to come up there. There we go. Just a ton of resistance here. So this is a major breakdown area. And I just don't think we've done enough consolidating to get through it, at least not right now. And I think it has to pierce 30,000 before it can really have a major pullback. Anyways, let's get back over to the spiders here. So lastly, markets are holding up. We have to respect that. Near term, though, I think we're a little stretched and a little extended. If you get into this, say, like if we gap up Monday, Tuesday, and we're into this, I would be very cautious. I would take profits, something of that nature here, because you've got a lot of gaps on this chart here. You got basically 394 on Tuesday, in the middle of the day, and then Friday's close. We closed at 40, almost 410. So a huge move in just a couple of sessions. Most of the moves were done overnight as well. And then this could be made the case that you had window dressing and chasing. I know a lot of CTAs had to flip and were forced to buy into the close based on the quarterly close. So some of it a little artificial here, and we're going into resistance and this trend line here. So I would be a little careful in the near term. But for right now, remember, Fed funds rate is ahead of the 2-year Treasury note yield, and the market has sniffed that out. So just be careful with your trades moving forward. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.